Okay, Sharmila Joshi is with us here in our studios. Sharmila, good morning. Good to have you with us here. Thanks very much. What is your way of looking at the impact of the Bihar verdict, Sharmila?
Well, I think, for me, the biggest concern is that what it really means is that one had hoped that in the run-up to, getting the requisite number in Rajya Sabha, you would see that momentum building in favor of the ruling party. But, that picture somewhere has gone awry. So you don't know what will happen with that. You do have like a year before that happens. A lot can change in a year. So I hope that all this is, the way these elections have gone in the recent past is taken very seriously, and we get to see some things within the next 12 months. Now that window has gotten shortened to 12 months where you would see a positive outcome for the ruling party. Because I think if that doesn't happen, then there is a serious question mark on how much can get achieved in 5 years. We've already lost 18 months in that sense, and the hope was always that once you get that number, then the last 2 years could see a flurry of things getting through. So now I think there's a bit of a question mark for that, and I think the overall mood of the market would also sour. So that will, I think, now take some serious doing to really improve the sentiment. I think the only outcome a positive that I can see just now is that maybe we get some large ticket buying. But really speaking, as of now, that even that doesn't seem to really something that you can really bet on. So overall, I think we are in for a bit of a rough ride.
Okay. Most of the brokerages, institutional brokerages that I put out views from this morning, they're all saying, well, if you get a meaningful correction, it's an opportunity to buy. Would you believe that? 2% is meaningful, I guess.
Yes, I do agree that it's an opportunity to buy, and you do have to have that longer term view. But as I said, I think that, even if you were, I wouldn't really be in a hurry even to buy anymore, because I think that now you can take your time, because there doesn't seem to be, any runaway rally sort of that looks like it's going to happen. If the quarter numbers are any indication, there doesn't seem to be really any excitement in the economy. And definitely, I think the Bihar results are also not in any way going to contribute to a positive sentiment.
Yeah, that's the point really, that apart from elections itself, it's not as if the rest of the factors which go into the mix to determine the market and what the market level should be were positive. They're all deep in the negative. And we've been highlighting this. And basic on top of the list is corporate earnings, which have been very, very poor. So I think elections just kind of sort of pushing the market over the edge. We are starting, of course, we'll start as the market, the pre-open. I think the pre-open is behind us, is showing us we'll start deep in the red. That's about 1.7 lower and about 2% lower on the Sensex and the Nifty respectively. And then I guess we pick it up from there. There's Tata Motors and Sun Pharma, which I want to talk about as well. There's 7 minutes to the market open. I got about 165 points on the Nifty and 450 odd points on the Sensex. That's, deep in the negative zone. And I guess today is one of those days when you'll have pretty much everything across the board lower. So, it's going to be a sea of red, and no reason why it should not be. Sun Pharma and Tata Motors both reported numbers post-market hours. Both have disappointed. Tata Motors numbers especially were a bit of a shocker. The stock had gotten back to about 400 rupees. On Friday, it saw a bit of a crack going into the results, and the pre-open, I think, is showing us about a 4 or 5% cut. Sun Pharma is down as well, some 4-5% in the pre-open session. So, that is straightaway results-related impact. And I guess you'd see the general market dropping as well. So we're just waiting for the first trades to come up on our air, and we'll then get back to the discussion here. What do we have? Okay, I think 580 points, 560 points on the Sensex. And 176 odd points on the Nifty. There you go. That's about a 2.25% cut coming in on both the indices. 7779 and 25673 coming in. Tata Motors 4%, SBI 2.33% lower, Bank of Baroda down 2.25%, Sun Pharma down about 6%, Adani Port down 2%. You've got Vedanta down, Hindalco down 2.9%, ICICI Bank down 3.8%, Tata Steel down 3%, L&T down about 2.9%, 1337. I mean, where there's weakness, I think the pressure becomes unbearable. And I think ITC down 1.8, PNB down 2.5, ONGC down 1.5, HDFC Bank down about 2.25, Dr. Reddy's down 3.5% after Friday's near 13% sell-off. Coal India down, Sun Pharma is down 6.5%, 750 or so on Sun Pharma. So it's a pretty large cut. Idea is down about 2.5%. Infosys is down about 1%. And take a look at some of the others which are coming up with. It's all red, I guess. The extent varies, but mostly stocks are all meaningfully lower. Axis Bank down 4%, 446. So it's interesting that some of the earlier numbers, results which came through, which were poor, I mean, and stocks had corrected and then kind of stabilized. There is some selling coming in. L&T, for example, Axis Bank, for example. So there is renewed pressure. IndusInd Bank is down 2. Mahindra is down about 1 1/3. You got Maruti down 1 1/4. Z is down 2.5, 388. Lever is down 1.4, 788. Wipro down 1%. Ultratech down 2%. ACC down nearly 2%. Hero MotoCorp down 1. Bajaj Auto down 2. You got Bosch down 1.6, 1.7. Grasim down about 0.9%. And so forth. So this is the market open, a general broad market open, which is coming up on our screens. Sharmila, if you were, to play this, you would have had to be positioned on Friday, right, or Thursday?
Yeah.
To get this, then this would have been payday.
Yeah, but I doubt anybody would have really been, at least fully, because, I think the mood post-exit polls, because you had like such different numbers, on Friday was that you could bet either way. So you sort of...
By the way, I know of a couple of people who were fully... but these are market participants, veterans who were positioned the right way. So I'm sure there are others as well. And but anyway, but now that you got about a 2% cut on the Nifty and the Sensex coming in, is there anything to do now, or you just throw up your hands and say, well, I missed this leg down, and you should actually start to look at stocks, look at opportunities? Or you think it's too early? As you said earlier, there's no real hurry.
Yeah, absolutely. I think that while I do like stocks at current levels and I'm sure they'll move up, I would really bet for a slightly lower level.
Yeah.
So I'd just wait and watch for that. So if I was a trader, maybe I would think of going short. Yeah. But it is a little more risk. Definitely on Friday the risk was less. Or, whichever way you want to look at it. But I think at this point, having opened 2% down...
I think it's the point that it's not as if there are other reasons which will get the market up, right?
Absolutely.
Earnings is
out of the way. Today is pretty much the last day.
Absolutely. And earnings have been extremely poor.
Extremely, yes.
Poorer than I think what was expected, and what was expected was very poor.
Yeah. And as you're saying, I think in the large caps, especially where earnings is concerned, you don't see any real reason for excitement, like if you look at numbers of a or a BHEL or any of the...
if you think about it in terms of large caps, right? And where have they been beats? And I might be missing out a few names, but from the top of my head, there's Z, which reported great numbers. There's Maruti, which reported a big surprise, and there was Reliance, which reported a decent surprise, right?
Absolutely.
A beat. Yeah. I struggled to find a fourth company.
Yes, and even sectors which did well were sort of on the fence, so to speak, like the IT pack. Pharma's had a very mixed bag. While Dr. Reddy numbers were good, post the event you've had a negative for the stock.
Yeah.
So you don't know where that leaves Dr. Reddy, because the run-up has been huge. Sun Pharma was predictably bad numbers.
Yeah.
You even the sectors that you like, you think that you can wait, and you needn't be in a hurry to really add to anything.
Yeah. I think the additional worry in a way is going to be if you take people who are sitting on gains, if they start to despair a little bit. Imagine if you bought a stock at 500 rupees, it moves up to 1,000, and you're sitting on decent, strong gains, and then you start to say, well, okay, the market is dropping here a little bit, it's looking a little shaky, and you say, okay, I can maybe sell here, book profits, and I still like the name, I can get in way lower.
Well, to my mind, that has already happened. Or in a small way, maybe you could see that getting accelerated. But to my mind, that has already happened, which is why you see, some of these big cuts coming in a lot of these mid caps, where there could have been a whiff of bad news or something that could be taken a little negatively, and you've seen huge sell-offs. So I think that's precisely, because, people have decided that, okay, if there's going to be anything bad coming up here and I'm sitting on a gain, let me just book my profit and be out of it for a while.
So, I mean, basically selling cash deliveries to be able to buy way lower. I think
Absolutely.
some of that would have happened.
DCB, good set of numbers. The management says that we are going to double our banks, and the stock gets sold like so viciously, like all the way down from 130 all the way down to 80 something. So it's very clear that whoever had it at lower prices at about 40, 60 have just chosen to exit the stock.
But that's more like a strategic call. That I mean, you don't want to buy, you don't want to own the name anymore, right? It's not as if
yes, but
you're
why?
gonna buy.
The reason is a little strange, right? I mean, and especially when the management goes back the next day and says that okay, we won't expand at that fast.
But that did more damage, Sharmila, right? I mean, so essentially the management looked at the stock market price and said that, well, we should not do it. So what was the reason of doing it in the first place, right? So it almost told you that they didn't believe the reasons.
I actually appreciate a market which takes, a management which takes market reaction into this. Because I think the collective wisdom of market is always,
that's fine, but if you're doing
is always greater.
No, but if you're doing something wrong, right? I mean, which kind of blurs the lines of ethics and the market kind of pushes back and then you take that back, and we've seen that happening with large corporate groups as well. That is different. But this is a business strategy to expand. It's not as if, I mean, there were any ethical questions involved, right? I mean, this was a strategy, and they said, well, this is the way to go to counter all the new banks. And the market did like it. Well, they kind of sort of rolled that back quite a bit, and they said we won't do it now, but we'll do it over a longer period of time. So
I don't really take it too negatively, but yes, maybe that's the reason. But I certainly think that it was a really vicious sell-off. Look at the sell-off on CCD. I mean, on the first day of listing, you had the stock go down some 15%.
Okay, K. Subramaniam is with us as well. Subramaniam, good morning. Good to have you here. So, as a trader, and come in as a trader, what would you do now?
Well, Prashant, I think the market's clearly taken the results on the chin literally, and but part of it was discounted, and my sense is that I think somewhere during the day we will have some sort of short covering coming about. But if I were to really look at this market, probably I would go and look at some of the positive set of results which came, and maybe look to buy into some of the counters. Some of the sectors which are on our radar are something like breweries. Like I think we saw some pretty consistent set of numbers coming about from United Spirits, then your counters like GM Breweries. Tilaknagar Distillery. I think these are all counters which have done well. Then also some of the media entertainment segment. I think we saw some decent set of numbers coming from Inox, PVR. So I think these are spaces I think I would like to look at it. Of course, the disappointment is big in terms of whatever has happened. But I think this sort of all are the ones which are to be utilized to buy into such sectors, and some of the things which look positively biased, and probably we could utilize this opportunity to maybe buy into some of these stocks.
Okay, 470 is where 470 points or lower on the Sensex right now, and 145. So it's a big recovery which is already coming in, and as many have said, it's too early to say talk about a bottom, etc. But one sign that many traders etc. uses to mark a bottom in that sense is if they see the market in a single trading session go down very, very sharply, and then by close come up to positive, or to very little loss. So a big intraday recovery, very meaningful cut, and then almost a full recovery. That to many kind of also suggests some sort of a bottom. But what would be happening right now is that people who bought puts, who went short, those kind of positions, people, I guess, today is payday, so you'd basically you'd cut those positions right in the morning. So it's possible that, as the day goes on, there's more selling which comes in. So this is just the open, and you're basically dealing with earlier positions, and all of that is coming in. So give it some time, give it half an hour, 40, 45 minutes before the market kind of tells you what it wants to do. But right now, it's holding 7,808. Subramaniam, just outline the stocks for us again, a little slowly. What are the names that you would want to buy? Go on.
Well, as I mentioned, some of the counters like United Spirits, where we saw some decent set of numbers. Of course, today also the rates might have softened a bit. Something like a GM Breweries, which also saw some excellent set of numbers. Then I think United Breweries, of course, considering the sector and the valuations, I think probably that also could be considered for buying at dips. Then again, as I mentioned, the entertainment media sector, something like an Enox Leisure, that saw a huge crack from 280 down to 220. I think that's a pretty decent pick at current levels. Then the last one, of course, the one below the stock in their segment, PVR. That also, I think, saw some decent set of numbers, but probably was a bit stretched in the near short term. But definitely stocks to be looked at dips, and probably some of the IT counters. I think they were the ones which had started showing some resilience in the, I think, in this part of the series. And we have seen some buying coming about in likes of your STL Tech, Infosys, etc. And now that there's also this prospect of rate hike in US, I think these are the sectors I think people will probably looking at, and if the, of course, prospects are better to be improving in that side, I think obviously the IT counters are the ones to bet on. So I think these are the pockets probably I'll look at to buy into. But as I know, the general mood is a little pessimistic. Probably no great hurry to buy. Probably one could probably wait out this disappointment, because we have seen some pretty aggressive shorts coming about from the FIs, as well as some aggressive cash selling. So I think we need to give the market to digest this news and probably nibble at these stocks at any sharp dip.
Just a disclosure, you have positions, I mean recommendations, personal or otherwise, in these names?
Well, as disclosure, we have recommendation in Inox Leisure, but the rest of the stock, and of course United Spirits, the rest of the stocks are just some opinions.
Just one thing, as a trade, as a technical, I mean as a chartist, you'd want to go with the tide, right? I mean, the tide is lower, so the market is going lower. Why would you want to pick stocks to buy at this point?
Well, in terms of what we have seen, I mean, these are more in terms of the results outcome, because know that the market has gone into some sort of a heavy fall. Probably for a trade, I will probably just wait it out, because we had trades and probably that will get squared up now, because we had given some covered pull strategy where the futures got sold and we also sold some 7,800 strike put. So that will get sold. So we have to wait for the market to actually settle down now and see where exactly how we could take advantage of any movement. And we are also going to have a truncated week ahead. So my sense is that probably we may take advantage of some of the out of the money call puts and try to capture some part of the premium. But at the immediate juncture, probably any trade on the Nifty or any stock per se, probably may be a little too early to comment on.
Sharmila, any thoughts on any stocks you want to comment with?
I was just seeing the way stocks have fallen, and I think that, even stocks where numbers were good seem to be correcting, which...
But, just an observation, it doesn't seem to be that bad, right? 1.5, 1.5, 1.6% is, I mean, bad enough, but this is...
Well, you're only seeing the days fall, but actually if you see how we've come off from that 81 whatever level, then I think, it's that way, it is a fairly largish fall, and I think it's really just on the back of numbers and then, some amount for the event today. As I said, I would really rather just wait, because I think even stocks, as I said, where numbers were good, even those seem to be coming off. So I think all the more reason for to just wait a bit.
Okay, fair enough. Dr. Reddy's, any thoughts, Sharmila?
I think you need to wait at least 1 quarter, because the management sounded very confident in saying that they will resolve the US FDA issues. But I think the way they've had letters for, I think, all their 3 facilities and the kind of market size that you're talking of for those products, it's a fairly serious development. So I would really wait 1 quarter or so, and really see how things pan out with the resolution of this problem before really buying into it. But numbers were pretty good. Dr. Reddy numbers were, they really had a very good quarter in that sense, which was, they sort of were much better than all the other large cap pharma. So they were pretty like the top of the heap, and then this event has just, I think it's also a warning to, some of the other pharma stocks where levels are fairly good just now, because I think this whole US FDA activity will only, I think, pick up, and I think it's a matter of time before they really a stock which has sort of run up, where numbers are good, if they get an inspection, they get some negative thing, you could, see some sell-off there as well. So you should be a little cautious, I think, and if you're given the market environment, given all the developments, it might be a wise idea to book profit in some of the pharma names.
All right. Thanks very much, Sharmila. Good speaking with you. Appreciate you joining in. Subramaniam, thank you very much. Appreciate you joining in as well. Happy Diwali to both of you.